Let's bring you the latest in the world of business. The JSE is starting the week off marginally in the red with a number of key global events that are expected to shake up global stocks this week. For more on what's happening in the markets, we're joined by Herenya Capital Advisors founder Petri Redelinghuys. Very good afternoon to you, Petri. Thank you so much for your time. What's driving local and global stocks today, and particularly, how is the JSE performing?
Good afternoon, and thank you for having me. So, a bit of a muted day, I guess, on the index level. Let me just have a look at where the index is right now. I haven't looked at it in some time, but the index still, I guess, basically flat for the day, right? It hasn't really moved that much. If you look at the all-share index, it's down around 0.25%. So, I guess not really flat, but not nearly fireworks or brimstone or anything like that. So it's kind of a muted day. I think that currently the market is kind of just holding its breath and waiting for results coming out of the US. It's going to be a really, really big week with most of the big tech giants releasing results either on Thursday or Tuesday this week. Just for context, the S&P 500 in the US, for example, has returned a positive. That return, or all of that positive return that we've seen from the S&P 500, comes from 13 shares, the 13 biggest shares in the index on that side. And of that, 70% of that return comes from just 5 stocks. So these are Amazon, Google, Microsoft, basically the tech giants, right? If we look at, the results coming out this week, every single one of those top ones are essentially releasing their results either on Tuesday or on Thursday this week. So it's going to be a massive week, and I think the market is really waiting with bated breath for that. Also later this week, we have the US Federal Reserve making an announcement on what they're going to be doing with interest rates. I think the market's also kind of looking forward to that data coming up. Yeah,
I'm hoping this line will hold and strengthen for the little while that we're still on air. We know that 2 major events are taking place. The Bank of England and the US Federal Reserve are announcing the interest rate decisions. Why are all eyes on those announcements, and what are the implications for South Africa's capital markets?
Well, I think it's been, we've been in an interest rate tightening cycle for some time. We've seen the US Fed starting to change the wording around what their expectations are for interest rates, essentially slowly starting to remove that narrative of, expect higher interest rates for longer. So obviously there's quite a bit of focus on that. I think essentially what happens, and I think this is, I guess, where there's a little bit of a difference of opinion from different people. When interest rates begin to come down, generally that brings some relief to the consumer, right? But we have to remember why or how the interest rate mechanic works. When the economy is growing too fast, inflation is too high, so there is too much demand for too few goods, so the price of goods and services go up. At that point, interest rates are used as a mechanism to slow the price growth down by essentially pouring cold water on a hot economy, right?
Yeah.
When interest rates come down, that's generally because we're starting to see a drop in demand for goods and services, and therefore the price pressure of goods and services begin to come down. And in order to stimulate that economy, we bring interest rates down to make more money available through the lending system and that kind of all those kinds of mechanics to kind of stimulate the economy and put some coals under what is a cold economy. So generally, interest rates coming down is, we're all looking at that as a really good thing and something to look forward to. But at the end of the day, that means that the economy is starting to struggle enough that it needs a little bit of stimulation.
Yeah, Petri,
or a little bit of stimulus.
Just looking at how consumers are being financially squeezed hard by high interest rates and lower disposable incomes, and the trading statement from fashion retailer Truworths shows that this, including a warning about its half-year profit. What's at stake in that space?
Exactly. It's a good example, right? So if you look at that Truworths trading statement, cash sales was down by 0.9. Let's round that up, 1%. 70% of the sales in South Africa was driven by credit. So those and overall, sales essentially driven market is slowing down because there's too much pressure on it. What was interesting is to see that their UK brand did really well. That grew sales by quite a considerable margin. So overall, the group grew sales for the period by something like 8.2%. But South Africa or Truworth Africa total sales actually shrunk by 0.3%, while the Office brand in the UK, driven, I think 47% of those sales were all online. That grew something like 15.6% to 162 million, pounds, which is 3.something billion rand in rand terms. So a lot of that growth really a new market for it in the UK that's growing relatively fast compared to South Africa. So they've put up the profit warning that, look, they don't think that that brand is going to continue to grow at such an exponential pace, in the UK, which could potentially be, great profits now, but in 6 months from now might not necessarily be as good.
And very quickly, JSE-listed British mining group Gemfields has released its operational performance with some interesting milestones on their auctions, among other news. What's your take there?
I mean, they're kind of, and rightly so, I think, quite proud of the fact that they've passed a milestone of since their company started in 2009, or since their first auction in 2009, that they've obviously sold rubies and emeralds and all sorts of gemstones. They've essentially surpassed the sales number of $2 billion cumulative sales of emeralds and rubies since 2009, which is absolutely massive. And they also brag a little bit that they've paid something like $400 million in taxes to the governments of Mozambique and Zambia. So it shows you just the massive contribution that these mining companies have to economies, right? I mean, to pay $400 million in taxes is massive. But generally, they had a really good auction as well. Auction revenues, I think, they set a record now for the most recent one that they had over the last year. So overall, the company's in a very strong position and doing very well. It's not in the diamond space; it's more in the ruby space. But demand for that is really robust. And also they mentioned that the mines that they have, the quality and the size of the gemstones that they keep pulling out.
Before we let you go, just pardon me the interruption there. We're running out of time. Talk to us about Elon Musk and his artificial intelligence startup, the XAI, and what's happening in that space.
So it's interesting to me. Elon Musk is one of those characters who is very strongly, has said a number of times that regulation in the space of artificial intelligence is extremely important, and he's called other AI companies reckless in the past for not having stringent enough controls. So now he's trying to raise something like $6 billion, dollars in order to start his own AI company called XAI. They've been fishing around Hong Kong as well as the Middle East for the capital to be able to do this. And it values the company that he's essentially founding now at around $20 billion, which, according to, in comparison to other AI companies, is quite conservative, actually. So we'll see. I think there's a good chance he'll probably get the money, and we'll see what they pick up. I think there's a lot of competition in the AI space.
Okay, thank you so much. Unfortunately, that line is not sounding so great, Petri, but thank you for your time. Herenya Capital Advisors founder Petri Redelinghuys giving us a sense of how the markets are faring this afternoon.